It's like, I haven't paid my
Wow.
mortgage in years. And she's like, and once I'm done with this one, after I've seen this work, I'm going to rent out the main house for $3,000 and I'm going to buy a new house and I'm going to do it again. I'm like, you did this in California? Like your house is, and she's like, yeah, I got a recent appraisal. It's like worth $2 million.
70% of homeowners in the United States have at least $200,000 worth of equity in their homes, but only 28% of those people are even thinking about leveraging the equity. Most people think that millionaires are made by working hard and saving money. But what if I told you that most of them got there not only because they worked hard and saved money, but because they learned how to borrow smart? The wealthy have been leveraging the equity in their homes for years and quietly too. And all of this growing their wealth, acquiring property, cash flowing businesses, and growing their net worth, all without touching their retirement, their stock portfolio, or their savings accounts. And in this episode, Jason and I are going to show you the products that these millionaires use in order to leverage the equity in their homes and how you can do it too. But before we move on, if you have been rocking with us for a while, you might already know the basics of a HELOC. So feel free to skip forward. And we also have other videos on the platform that break down the HELOC structure. So be sure to check those out too. But real quick, 60 seconds or less, here is what a HELOC is. A HELOC is a secured revolving line of credit, and it's secured by your home. That means you're using your home as collateral in order to borrow money. It functions similar to a credit card, but it's not, because it's backed by your house, and you get a much better rate because you have a hard asset securing that line of credit, as opposed to an unsecured line like a credit card or a personal loan. The line limit is calculated by using your equity position in the home and your ability to repay. You can get a variable interest rate or a fixed rate interest rate HELOC, and there are slight differences, but generally speaking, they both have the same structure. There is a window of time where you could use that line of credit, and there's a window of time where you can no longer draw money and you're just repaying the loan. Now, the rates are tied to a benchmark. Usually it's like the prime rate, and lenders will usually attach a small percentage point on top of that, plus fees that are used to pay the teams of people, including someone like me, the originator, to get you that loan across the finish line. So Jason, I'm sure you've had tons of customers that have come to you asking, looking for a HELOC. What is like the most common thing that people are doing with their houses these days that you're hearing?
I think it's the tried and true, right? Like bathrooms and kitchens. Like those are like the things that sell homes. So a lot of clients are either preparing one of two directions. They want to retire soon. And
Mhm.
while they have the ability to borrow and repay that type of anything that they borrow now sooner, then they do it so that they can make that a home that they can age in place with, right? Or it's, I'm about to downsize. I want to get the maximum value from my home. And they speak with their realtor too, and they confirm. It's like, it's a known method for many generations. Do the bathrooms and kitchens, and that's going to give you top dollar. It's not, if not top dollar, it's also going to help speed up the timeline from posting it, the home for sale, to getting into escrow and closing, because that's the most important. Because right now, the other issue that I'm seeing is homes sitting on the market for a very long time.
Right. Yeah. I mean, that's a very slept on topic when we talk about real estate sales and transactions. Like the days on market, it signals to the buyer that, hey, this is not as hot as you think it is. Like there's a problem with this property if it's been on the market for 6, 7, 8 months, right? And there's no buyer. Like, what's the issue here, right?
Oh, exactly. And it's like what's hidden in the closet, right? And the
Yeah,
other
yeah.
big one, actually, like where you're talking about renovations, it's
Mhm.
actually an ADU. Like I'm seeing a lot of opportunity in like LA County or north of it, even bleeding up into like Central California, where people are now redoing the math and finding good deals and making them
Mhm.
exceptional by adding an ADU.
So what is the ADU for people who don't know what ADUs are?
Like you can think of it like a tiny home on your lot. So like in California right now, they allow you to have a detached or attached addition where you have another, like technically on your single family home or duplex, you can add another building or housing unit.
To
And it's
make a
called an
triplex,
ADU.
essentially.
Yeah, basically. And you can convert your house, single family home, into a duplex without being a duplex, right? They made it so that there's less like rigors of trying to get your home approved for plans. So they standardized it with what they call an ADU, which is an additional dwelling unit on your home. So people, so this one house I've seen, they actually went from house to ADU to JADU, and then they converted one living space inside the home to an attached JADU. So she had turned her single family home into a 4 unit.
What's a JADU? Is that a junior? Is it smaller than a regular ADU?
Junior ADU. So though you can technically build a detached junior ADU, a
Uh-huh.
detached ADU, and also have a inside the house like converted JADU. So you can have 4 houses basically on one lot in California.
That's
But she's smart. She's
cool.
like, I'm doing this on purpose. So this is my retirement ticket. It's gonna replace my income. And she's like, the back ADU, the full size one gets about 2,800 a month. The junior one gets about 2,200 a month, and the garage
Oh,
conversion gets like two
wow.
something a month. It's like I haven't paid my
Wow.
mortgage in years, right? And she's like, and once I'm done with this one, after I've seen this work, I'm gonna rent out the main house for 3 grand, and I'm gonna buy a new house, and I want to do it again. And I was like that, and I was like, I'm like, you did this in California, like your house is, and she's like, yeah, I got a recent appraisal. It's like worth 2 million bucks.
Wow, it's like you're making your own apartment complex.
Basically. So, like, when she got her recent appraisal done, and she told me, she was like, it's like $2 million." She's like, "I made this house that I bought for 900 grand, $2 million
Yeah, because of the income. Yeah,
because of
generating
the income
property
coming
now.
in and,
Yeah, yeah.
like, obviously, the improvements on the property, right?"
That's super cool. That's super cool.
It's called subject to. They'll buy that property subject to keeping the existing mortgage that's in place. So, the person may be distressed. I'm looking at a listing right now that I see in Texas, right? And it says current sale price is 290,000. Remaining mortgage is 277,000, and the HOA is $50 a month. There's no balloon. The interest rate's at 5.75%, and they say entry fee $12,500 plus closing costs. So they're saying like, "Hey, I'll sell you this house with the subject to of I'll still keep the mortgage in my name, but you own the property, and then you have to pay me a difference, and that entry fee is 12,000 bucks." Because the seller is like, if I sell the home traditional way, I'm upside down anyway. I can't sell the home, so they're like,
Mhm.
take over my mortgage, 5.75%.
I've heard people talking about this online. There was this guy who was like a wholesaler, a real estate wholesaler.
Yeah, that this is like there's so many of them. There's so many of them. There's thousands of them. Like
Yeah, so this
it's
must be illegal. This is a legal
it's
activity, but there's some sort of loophole.
I can't speak for the mortgage servicing companies because technically, if they
Mhm.
found out, they could call the mortgage due. And I'm pretty
Mm.
sure they do find out too that the ownership changed or something updates, and they're like, "Who the hell is this?" Right? Well, it's not Jason Kim on the deed anymore. Why is the insurance that's escrowed saying something something rental company LLC? So it's like you never know. Like sometimes people get smart about it and they just transfer it into an LLC. So it looks like, oh, it was an investment property to begin with. They just moved it into LLC and the servicing company may never know. And you get to proceed with no repercussions. But it's like a gray area because it's like if they find out now your mortgage is due, right? It's been sold to a new owner, a new entity that has no relation to the LLC potentially, right? And it's a risk. And then like, what if the new buyer that buys it and you're the owner that has the subject to mortgage that you're still responsible for, because if it forecloses or misses payment, now your credit score's shot. It's interesting, like, and it's been around for many years.
I was explaining this to some people like, "Hey, I saw this content and I saw a wholesaler making these deals. Let me take over your mortgage." And their response was, "How? Legally, how?" Right? And I was
Technically you're not
thinking about it
supposed
like,
to. That's not the traditional way to do it, right? You
yeah.
sell, clean the slate, go through escrow and title, put a lien of it on of your own on it, and then proceed, right?
Yeah,
But then like
because the mortgage company is whoever's paying the mortgage, if they default on that mortgage, the mortgage company can go after the home.
it's still tied to that property. It's just who's the person they're going to be going after. I guess legally it's confusing. I'm not an attorney, so it's just dirty. It doesn't mean the lien never goes away. It's tied to the property, no matter what. So it's a clouded title. So they'll fight with attorneys to keep the mortgage in place, or they have no choice but to refinance it to
Mhm.
take on that mortgage liability now as a new owner, or they sell it.
For anyone watching this, if you are familiar with the topic that we're talking about and you
Subject to.
yeah, subject to, if you're familiar with this topic, please write in the comments where we are wrong about this and how this is legal. How people are actually doing this, because it's very fascinating. And I think a lot of people could benefit from this, this kind of like loophole in the system, if it's legal, right? Maybe there's something in the contract where like, hey, like if
And
you default, then I get the house back or something, and then
it
I
might. It
have,
might have stuff
right?
like
So
that.
is it kind of cascades down the liability back to the original owner and then back to the bank if anything defaults. So Jason, I know that we've been hearing a lot about velocity banking from people in the comments, and we also just made a video about velocity banking. People love using a HELOC to accelerate the timetable when they do own their home outright. And this is, legitimately a strategy that some millionaires or people aspiring millionaires may be engaging in, because they believe that the theory is sound. If you have, for people that don't know what a velocity banking strategy is, it's basically you pull out a HELOC from your home, you max out your HELOC, put a significant portion of that HELOC funds into paying down the principal of your home, and then you kind of live off the rest of it. And your entire income goes into paying down the HELOC. So this concept is, in a perfect world, you're accelerating the time to own your home and you're accelerating the time to pay off your HELOC. But we don't live in a perfect world. So
No, we don't. And according to those calculations, you have to make a decent amount of money because like they're expecting in their calculations, from what I've seen, to be successful, you got to be able to put 70% of your income into it. So that concept, it works on paper as long as you make a lot of money. Like it's again another level of risk. And the other thing that come to find out is those velocity banking gurus actually charge customers a lot of money for advice up front, several thousands of dollars up front,
yeah.
which blows my mind that people would pay someone five, six, $7,000, maybe even more, from what it sounds like, to get that advice, get that coaching, right? Because they're gonna follow up with you to make sure you're staying on track, right? For success, to paying off your home faster with your own money that you're risking to put in there. And they're not even the lender. They don't even
I
do the
know.
loans.
That's the crazy part, because you
That's
have to pay the
crazy.
lender too.
Right.
The
Nothing's free.
closing
So it's like
fees.
you pay that coach several $1,000s and then you have to go find your own loan to do it with, right? What happens if you don't get approved?
Hopefully our channel grows to the point where people, we can prevent people from wasting their money on like these kind of coaching and gurus and stuff like that, and they could just come. Honestly, there's so much free information on YouTube. It's such a great source of information. Another use for HELOC that, a lot of the your wealthier, more successful customers do use it for is, potentially like partnering with a small business, or getting a share of equity or like controller owner stake into a business. Maybe even putting it into their business to grow their business. Right. Basically, anything that produces cash.
If you're a millionaire already, you're really probably really good at building businesses. So it's like you know how to deploy capital. Like that's and deploying it effectively. Like you said, they're putting it into buying franchises, stocking inventory because they know what's coming for the next season and they want to be ready for it. Or you just have like other service-based businesses you need to expand because you're, say, for example, your HVAC company and you hire 10 more technicians and you need 10 more vehicles. Where are you going to get capital from? That's cheaper than a business loan, right? A lot of these, that's actually where the biggest ones I've seen because like they're like, I am expanding my business. I have more employees and it's cheaper for me to tap into a HELOC at 6, 7, 8% than get a business loan at 10, 12, 13%.
Yep.
So it's huge how different it is having leveraging residential property of yours versus getting a business loan or like a SBA 7 like SBA loan, right? Imagine like the 25-year AM interest only or adjustable rate like capital investment loans. It's not cheap. Some of them are good. Some of them can be very good, like real estate ones, but like capital equipment, stuff like that, those are adjustable rates and higher rates with
Yeah, I
bigger
mean,
margins.
100%. Like this is something that very familiar with because of my previous profession. And Jason, we go back a long time. And when I was telling you about the new loan that we did for our, my previous company, you were shocked by the interests because it's so different from,
Oh,
real
it's
estate and
insane.
mortgages. The interest rate, it was like double, right? And I was like, yeah.
I thought we were looking at credit card interest rates, and I was like, "How the heck is that possible? How do you survive, like, business with that?" It's but
That's what I'm saying.
but you
Yeah.
take the risk. It was worth the risk.
Definitely, entrepreneurs, people who run businesses are cut from a different cloth and a lot of respect. Like both of our parents, my dad and your dad, are entrepreneurs. So we've experienced it kind of like from a front row seat, and the stress that, it's never turned off. Right. So
Mhm.
it is an amazing part of this country that people from like literally like a third world country can come here and start a business and start from nothing and
Yeah.
make something of themselves. So like
We were from a
100%.
third world country back then, or at least my
It
dad
was
was. In
Korea
the
was a
'70s,
third
it
world
was like
country.
after war, there was nothing left. There's that destruction and starvation in Korea. But it's
Right,
like
right.
it's very different now, right? And then it's like I see
Super
the
di-
people there too. They don't have the opportunity like we do, like in America. Like you have the ability to buy a home, borrow against it, build a business, and succeed.
That's basically what we're all after here, right? Me, you, people are who are tuning into this. Like literally the title is how to use a HELOC to grow your money like a millionaire. Or something like that. I don't know what the title is going to be. But yeah, you're here because you want to figure out how to leverage something that you own to get more. And that's like the American dream, which is what we're all looking for. And just a quick disclaimer, like Jason said, we are not telling you to do any of these activities. We are not your financial advisors. We're mortgage brokers. So we're only giving you examples of activities to give you like an insight of what people are actually doing with the HELOC. It's up to you to make these decisions, to talk to your professional, like money manager or your CPA to get as much information to make your own decisions.
We're loan originators. We help customers as brokers. We're here as your advocate, right? So we want to represent you and find the best solution that we can for these home loan products, right? So and again, we don't do just HELOCs. It's just everybody that we've been encountering the last couple of years is like always asking about HELOCs because it's a very unique product.
Here are like the three ground rules that we've come to after studying all these millionaires and how they use leverage is number one, borrow against appreciating assets, not depreciating assets. Because when the loan comes due and your collateral has depreciated, then you're upside down. No one will ever lend you money against a car. A house appreciates, so people will lend money against the house. Always have an exit strategy. So whether you're going to refinance that loan, sell the house, or use it as an income stream, you need to have an exit strategy. This is the same for business. When you buy a business, most people are not looking to sit in that business for 50 years. They want to eventually sell it or take it public, right? So rule number three is to
Like literally, it's you borrow to earn, right? What we mean by that is whatever you invest in, deploy that capital for, you're expecting a return on it.
here's some mindset things that we want to leave you with. So, HELOC or any kind of loan or line of credit, please don't use this as like a lifestyle inflation hack. Don't go and buy that car on vacation. If you are trying to achieve financial freedom, you got to use it to grow. If you use it to grow your toys, then you're just gonna dig yourself into a deeper hole. If you ignore the market while you're using a HELOC, you could be setting yourself up for a big slap in the face, right? So whether that's a housing market, the prices are going up, prices are going down, whether that's your business market, if you're using it for business purposes, taxes, legal atmosphere, tariffs, like all these different things, like you need to be paying attention to the market wherever you're deploying that capital into. This is not a passive income method. Like it's gonna be an active style of investing. And number three, don't gamble with it. Of course, we are talking about risk because you're using the funds in order to leverage and grow something else, which is not, inherently risky. but we're not talking about gambling. It's a calculated risk with information, as much information as you can get,
Mm.
with help from specialists and experts like us. And you have to do it with discipline. So, if you want expert help to structure your HELOC strategy the right way, hit that link in the description or use a QR code that shows up on the screen. Talk to us at the Clear Close, and we'll help you develop your personalized HELOC plan and be your financial partners in this real estate game.
Thanks everyone for watching, and we'll see you on the next one.
Thanks for watching. If you're interested in our thoughts about velocity banking, click on this video at the top. Or if you want to know what the most common mistakes people make in a HELOC and how you can avoid them, click this video on the bottom.